Good morning. Welcome to the Teachers Retirement System of the City of New York Investment Meeting for November 3rd, 2022. I'm going to start by calling the roll. Brian Berge.
Brian Berge, representing Mayor Eric Adams.
Thomas Brown.
Good morning, Patricia.
Russell Buckley.
Representing Panel of Education Policy Chair, Dr. Angela Green, and DOE CFO, Sri Scott.
Allison Hirsch.
Here representing Controller Brad Winter.
David Kazansky.
Present.
Deborah Penny. Deborah's stuck on a train. So, oh, you're going to say here. Go ahead, Deborah. I'm sorry.
I am here virtually.
Okay. Thank you. So we do have a quorum. I'm going to ask for a nomination for a temporary chair until Deborah Penny can arrive here. So
I'd like to nominate Thomas Brown.
Okay, do I have a second?
Second.
Okay, all those in favor say aye.
Aye.
Okay, so Tom, I'm going to turn it over to you.
Great. I guess we start. Good morning, everybody. Now I feel it.
There you
Good morning, everybody. I guess we start with Michael Fulvio with a Task-Deferred Funds performance review.
Yeah, and I am
Great.
still in the process of setting up the screen share, so I apologize. But I know folks have some materials. In the meantime, I'll start speaking through what we saw in the month of September. You'll recall it was quite a challenging month for the markets. The fortunate thing I'll say is we had to trot through what was a challenging month of September to get to October, which Devin will speak a little bit more about in a few moments. The diversified equity fund as a whole was down about 9.4% for the month, in line with what we saw across the markets. And year to date, that puts the calendar year to date, that is, puts the fund down by about 26%. For the fiscal year to date, or the first quarter, if you will, of the fiscal year, the fund was down about 5.6%. And again, those numbers are roughly in line with the benchmark. For the year to date, a little bit more lagging due to the contribution, if you will, from active management. As far as the other passport funds, the balanced fund was down about 4 1/3%. Roughly in line with its benchmark. In calendar year to date, that fund down about 13.5%. Again, speaking to not only the challenges we've seen with equity markets globally, but also the rise in bond yields this year, which has been quite notable. The International Equity Fund, with just shy of 200 million in assets, that returned negative 9.7% for the month. That was ahead of its benchmark during September. Year to date, that fund is down about 28%, just slightly behind its composite benchmark. And the Sustainable Equity Fund down about 10% for the month, 33% for the calendar year. Again, speaking to the challenges we've seen with respect to growth-oriented stocks more broadly. And so not surprising that this fund is down more than the core indices, but very closely in line with the growth market, with the growth part of the market. The US Equity Index Fund, again, down about 9% in line with US markets, and the International Equity Index Fund down about 10%, roughly in line with markets. So again, a really challenging month. What we have seen for the quarter, all told, was slightly better, because you'll recall the quarter did start out with a better month of July. And unfortunately, that was more than offset by what we saw in August and September. So I'll pause there and see if there's any questions before we speak to what was a better market in October.
Questions? So Mike, we start with, Devin, you're going to take the October?
Yes, I will.
Great.
As Mike alluded to, we did have a sort of a rebound for the month of October. We did see some positive results across the board. In the global market composite, we saw returns of 7%. In the diversified equity fund hybrid, we saw also returns of 7% as well. As Mike also alluded to as well, fiscal year to date, we did see a sort of a rebound, to say, that sort of compensated for the loss in the early part of the year. where we had fiscal year-to-date results of just under 1% for both the global market composite and the diversified equity fund. On the balanced fund, we also saw positive return as well of 1.66%. Going down to international equity fund, we did see positive return again of 3%, although still negative for the fiscal year, down by 7.11%. And the remainder of the asset classes, the sustainable equity fund and the US equity fund, US equity index fund, all performed positive as well. We did see the US equity fund performed quite well, actually, with 8.16% for the month, and also positive for the fiscal year, 3.23%. International equity, we also saw positive return as well, 3.44%, although still down for the fiscal year, down by 7.36%. Any questions?
Yeah, I'll just add too, I think, the notable update coming out of the markets came yesterday with the Fed and the announcement of another 75 basis point hike. The market took the language around that, around the announcement to be a little bit more dovish than what we had seen in the recent past. I think there'll still be probably more people deciphering when the minutes come out to see, how the market fully interprets that news, but it was met positively yesterday. And that's helped with returns we've seen over the last week or so.
Thank you, Mike. Thank you, Devin. Questions for Mike and Devin?
Regarding the rate hikes, is the feeling that they're pretty much done for the year and that anything, or is there more?
I think at this point.
And if more, is it gonna be?
Yeah, I think that I think the expectation is that there may not be as notable hikes, but likely continued smaller hikes. And the language was more specific around, being more precise and deliberate with something that's more measured as opposed to what we've seen. But again, I think there's still, until we see the full minutes, we're just reading between the lines on the announcement yesterday. I don't know if you had a.
Yeah, so actually I agree with everything. It's fourth consecutive 75 basis point rate hike, which is hawkish in nature. I do think that the official statement was a little more dovish. The comments afterwards were very hawkish. So right now, the way they left it in September was they thought that the terminal rate of Fed funds would be 4.6%. Market's now pricing in 5.20% this morning. And the Fed chair did say that given the persistent strength in the employment market and the persistent high levels of inflation, they're going to go further. And I agree with Michael, the pace may change, but they're not done. A lot of they go 50 or 75, and there's 2 more employment reports and 2 more inflation reports before they meet mid-December 13th, 14th. So they'll wait and see what that looks like. But I do think they're going to go at least another 50. And now the market's pricing another 50 for February 1st. So there's a little bit more wood to chop there.
All right. Thank you, guys.
Is there anything the Fed can do as they, are trying to stem inflation by raising rates? And, there's been a lot of reports out there that one of the additional factors of inflation is that profit margins continue to increase. So, there's an argument. Is there anything the Fed can do to force companies to not, price gouge as they are?
Yeah, the Fed doesn't have that mandate. I mean, there would be other officials. There are things that perhaps the president could do in terms of executive orders around that price gouging. But you're absolutely right too, Allison, that the earnings figures for the third quarter are coming out, well, weak, but not as weak as expected.
Yeah.
That's why we saw the rally in October. And Devin was dead on. The rally in October was pretty significant. I wonder if it's another bear market rally like the one we saw in July and early part of August, because it's given a lot of it back today. And yields are up about 17, 18 basis points, pretty much across the curve. So yeah, I think there's going to be more challenges ahead. My expectation is that things may start to feel a little bit better mid-year 2023. At that point, the Fed would have, I think, reached its terminal rate of Fed funds. And monetary policy operates with a lag of around 12 to 18 months. It's only been 4.5 months since they really started hiking in earnest with 75 basis point hike. So I think it's a little bit more of a challenging time ahead of us, notwithstanding the rally we saw in October. looks like we're giving a good portion of it back today.
What are the markets doing today?
There's a lot of red on the screen.
Anything else? Thank you. Steve, Mike, and Devin. Anything else for public agenda, public session? So I guess we'll go into the executive session. Do I hear a motion?
So moved.
Hear a second?
Second.
Oh, great, thank you, Russ. All in favor, say aye.
Aye.
All opposed, say nay. So we're now going into executive session.
Okay. In executive session, we received some preliminary performance data. We received an update on the excluded company list process. We received a real estate presentation. Consensus was reached. We received a presentation on an alternative credit investment. Consensus was reached. We also received an update on a personnel matter within a consulting firm.
Thank you, Ms. Stang. Does anyone else have anything for a public session? Okay, hearing none, do I hear a motion to adjourn?
So moved.
Thank you, Mr. Kaczynski. Do I hear a second? Second. Thank you, Ms. Hirsch. Any questions? All those in favor, please say aye.
Aye.
Any opposed? Any abstentions? We stand adjourned.